always reacts here. But the shocking part is, most traders see this level and still ignore it. They enter too early, get trapped, and then watch price move perfectly from the exact zone they missed. So what is this level? And why does the market respect it again and again? In this video, I'll break down my exact entry strategy step by step and show you how to find the one area where smart money actually enters. Watch carefully, because once you see this, you won't be able to unsee it. Now first, let's understand the blueprint. Here, I've marked both the highs and the lows, but the real focus is on the highs, because this is where the market often reacts and where smart money becomes active. Notice how price reaches this area and doesn't just continue moving up smoothly. Instead, something interesting starts to happen here, and that's exactly what we'll break down in the real chart. Now, on these highs, I've marked the supply zone, the point of interest. This is the area where most traders expect price to break and continue going up. But in reality, this is often where the market starts preparing for a move in the opposite direction. And the interesting part is, price doesn't just react instantly from here. It does something very specific around this zone, and that's exactly what gives us the real entry. Now watch how price behaves after reaching this zone. Instead of moving in one direction, it first drops down, and then slowly starts pulling back again toward the same area. This back and forth movement is not random. It's how the market builds its next move. Most traders get confused during this phase, but if you understand this flow, you can start predicting where the real move is likely to begin. Now, to make this clearer, I've marked a few key things. First, the break of structure to the downside. This shows the market starting to shift direction. Next, the minor inducement, a small move that can trap early traders. Then, the major inducement, a stronger move that traps even more traders. And finally, the sell-side liquidity below the lows. This is where the market is often drawn to. Don't worry if this feels unclear. In the real chart, everything will connect. Now that you've seen the blueprint, let's move to the real market. Here's an actual chart, and watch closely, because the same structure we just discussed is forming here in real time. At first, it might look random, but if you pay attention, you'll start to recognize the exact same pattern. And this is where things get interesting, because now we're going to break it down step by step. Now first, let's mark the supply zone, the point of interest on this real chart. This is the area where price previously reacted and where smart money is likely to become active again. Most traders see price coming into this zone and expect a breakout. But this is exactly where the market often does the opposite. So keep your focus here, because everything starts from this area. Now watch this carefully. After reacting from the supply zone, price doesn't continue upward. Instead, it breaks structure to the downside. This is the first real sign that the market is shifting direction. But here's where most traders get it wrong. They either ignore this move or they enter too late after the drop. In reality, this is not the entry. It's just a signal that something bigger is about to happen. Now look below these lows. This is where sell-side liquidity is resting, the area filled with stop losses from traders who bought earlier. The market doesn't move randomly. It's often drawn toward these liquidity zones. So when price starts moving down, it's not just falling. It's targeting this area below the lows. And once you understand this, you'll stop guessing and start following where the market is actually heading. Now after the drop, watch what price does next. Instead of continuing downward, it starts pulling back upward. Most traders see this and think the market is reversing, so they begin buying again. But in reality, price is simply returning to the supply zone. This pullback is not a reversal, it's part of the setup before the real move continues. Now inside this pullback, price makes a small upward move. This is called the minor inducement. It looks like the market is continuing upward, so some traders start buying early. But in reality, this move is just a small setup. It's designed to pull traders in before the real direction is confirmed. If you can spot this, you'll understand the market is still preparing for the bigger move. After the minor inducement, price makes a stronger push upward. This is the major inducement. It looks clean and powerful, giving traders confidence that the market will continue higher. Many traders enter aggressively here, thinking they've caught the next move. But in reality, this is just a trap to collect liquidity before the real downward move begins. Once this phase is complete, the market is ready for the actual drop. Now watch carefully as price reaches back into the supply zone. This time, it doesn't continue upward. Instead, it shows clear rejection. Traders who bought during the inducements often get confused here. But this rejection is the key signal. It shows that smart money is active and the market is ready to move down. This is exactly where the high probability entry is formed. Now this is the moment where the trade is executed. After the rejection from the supply zone, this is where the sell entry is taken. Most traders are still buying or confused at this point. But this is where smart money starts selling. You're not entering randomly. You're entering after the full setup, the move, the pullback, and the rejection. And this is what gives you a high probability entry instead of guessing the market direction. Now once the entry is taken, watch how price moves. It starts dropping with momentum, moving away from the supply zone. And where is it heading? Right into the sell-side liquidity below the lows. This is the area where the market is naturally drawn to, not randomly, but with purpose. And this completes the entire setup, from the zone to the entry to the final target. And that's the full sell-side setup, from the supply zone to the final move into liquidity. If you understood this, you'll start seeing the market differently. Don't forget to like, comment, and follow Discount Trader for more high-probability strategies. Also, if you want the buy-side version, I've already made that. Check it out next.